Good morning, everybody. This is Gil. Obviously, you can tell. I'm flying solo this morning. Chris is at an event somewhere in Europe, and they do not have fast enough Wi-Fi for him to be on the webinar today. Imagine that in Europe. I don't know what part of Europe he's in. I think he might be glamping somewhere. Anyways, if any of you have questions, you know where to ask them. So what's going on? Well, we're in a bear market rally. That's how we're looking at it. We don't really see it as anything different from that. And the primary reason for that is that, number one, you're due for some kind of action that you would consider to be bear market rally type stuff. And if you look at the weekly chart of the Qs as an example, you can see where you are. You're well below the 40-week line, and we've shown you bear markets from 2000 and 2008, which were the last two extended and severe bear markets that we had. The others have been short, sharp corrections, some deeper than others over the past 10, 12 years. But those two serve as examples of longer-term bear markets. Now, if we're in that, then, rally to the 40-week line in any of these, we can look at the SPY as well, would not be abnormal, So we go back to 2008, for example, and we can see how fast I can get back there. And we've shown you this before many times. Well, here's 2000. You can see during 2000, we actually did have this. The S&P was a little bit different than the NASDAQ because it broke down. The NASDAQ actually blew apart and then came up off the lows. But you can see that you had this rally in here that extended for several months. About not quite 6 months, maybe 5-6 months. In any case, it was a bear market rally, and it was playable on the long side. So if you're looking at things now, we've got, the NASDAQ is pushing past the May-June highs. So that's kind of a breakout. But the S&P, meanwhile, is running into resistance along those highs right now. So in my view, you're really not out of the woods either way. But the primary reason I don't think you're in a big bull market is you don't see the type of stuff you would see during a normal bull market phase, which is a lot of new merchandise. So, IPO market's been pretty flat. A lot of new merchandise in the form of new thematics that are driving the market. Right now, it's the same old themes. They get electric vehicles and solar's moving last week and earlier this week because the government's going to pass a $356 billion corporate welfare bill, and they're going to throw it at the climate change industrial complex, which would include solars and other alternative forms of energy, and then electric vehicles, et cetera. And so that's what's been driving those names. But eventually they run out of gas and they become short. So I view the current market environment as a two-sided affair. So that means I'm not necessarily bearish. I'm not necessarily bullish. I'm opportunistic. And so it's given that we're in the middle of earnings season, my focus is on moves that occur after earnings. So if we go and look at some let's just back out of this. If I can bring up all the charts that I want to. We'll just move these guys out of the way. But I mean, you're in a choppy uptrend, and it looks like a bear market rally to me. So it's a rally. Now, I guess for now we can classify it as a bear market rally, but I would need to see a lot of things changing with respect to leadership, with respect to new thematics, stuff like that I think has a better chance of driving intermediate moves in stocks. So today, for example, so we got, like I said, I'm focusing on the earnings moves. Okay, so this morning we get PayPal on a big gap up. If you look at this thing in the grand scheme of things, that's where you are on the weekly chart. You see that? So you're not really anywhere. That's that. Yeah, okay, it's a great big gap up. If you wanted to play it as a bottom fishing viable gap up, then you could. You would just use the low of the day at 98.18. as a selling guide. But if you're really on top of it, it actually was a short this morning. You had the MACD crossing here at around 101.70 in the pre-open, and that rolled over right into the open, right through the open, and maybe 15 minutes later we bottomed, and then you double top up here at the same price level, and now we're rolling lower. So you actually had two shots to short this thing. The other big one that reported this morning or actually last night, is Advanced Micro. That one was already extended. And again, you can get excited about the moves in semiconductors off the lows, but if we look at the weekly chart, where are you? You're really nowhere, and you're trying to come out. You've dropped into this structure here. You probably undercut the lows of it in here, and now you're rallying, trying to come out of this structure. You're still way down here in this downtrend, and you really haven't broken the downtrend lines as far as I'm concerned. So yeah, you can get excited about the moves to the upside if you can play them. There are ways to play them, I suppose. First of all, the big UNR through that prior base. So in other words, as I was pointing out, this I believe this had an undercut and rally through this low here. If you saw that, you might have been able to take a stab at it, but that's not easy to do because at the time the market's blowing up and doesn't look that appetizing. But that works out as an inflection point back to the upside. Now you're kind of extended on the upside. So I tend to view this more as an area where I might look to short it, but I can't really find any clean references here. That's a peak there, but I would call this a double top peak here, and you're up at 110 there. That's a ways. So at this point, yeah, it's coming in, and it was good for a scalp yesterday and this morning. But look at the action today. They brought it up right at the open, so it was gapping down. They brought it up, and then they rolled it over here. So you get a MACD cross right there. That occurs at about 97.50. Now you're rolling down to 96. So far that's working out as a short sale target into the earnings gap. And that's essentially what I'm focusing on. If we look around at the market in general, there's a fair number of names. This is actually compressing pretty quickly, 183 names. It's somewhere around 300 right at the open, but these are stocks up on volume. And I don't really discriminate on the basis of fundamentals. It's just everything that's up on volume greater than 30% above average for this time of the day. So we've got 183 names here. And they're moving some of these. If I just sort them by percent change on the day, you can see Uber is moving. But where's Uber? It's running up into this area of price congestion. So to me, that's a potential short. And they reported earnings, I guess, a couple of days ago. And so here they are gapping up. But where are they in the grand scheme of things? Well, they're down there. And they're still an infinite PE stock. They still can't make money carting people around, for pay for your ride each time or whatever their business model is. In any case, that's basically what is going on here. So, this one could have been shorted this morning. You could have come after it. It didn't work yesterday, but it was pretty volatile, so not really something I would play in. But also, Lyft is doing the same thing. But where's Lyft? It's just kind of down there. It's gapping up with Uber. You have some biotechs moving, but most of these are infinite PE names. Repligen, probably a better name fundamentally, but that's where you are there, so you're not going to buy that. And that's pretty much everything you're seeing in this market. Pinterest is up. I suppose if you want to treat yesterday's move as a bottom fishing viable gap up, you can, using the low of the day here at 2190 as a selling guide. Good luck. So just running through the things that are having the big moves today, for the most part, it's stuff coming up off the bottom. Cowen Group is a broker, and they're gapping up towards prior highs, so that you're obviously not going to jump on that. That's pretty extended. Some of the moves off the lows have been pretty pronounced. And if you're able to catch them and get lucky, then yeah, you can make some money trading them if you can sit with them. But it's not necessarily that easy. But you'll notice you don't see anything breaking out. I'm just going to run through. Let's look at some of the Coinbase is moving, but where is that running to? Up to the prior high. They're going to report earnings next week. Upstart is one of these infinite PE innovation names that I think they're DeFi loans, and I think I saw the CEO on TV a few months ago saying that it turns out that their customers are over allocated to debt. Yeah, so instead of just saying you're declaring bankruptcy, you say that you're over allocated to debt. Anyways, some others, you got Marathon Digital is a crypto name. That's a Bitcoin miner. But where is it? It's just hanging out in here. You got earnings next week. Roku is trying to rise from the dead, but it's actually filling this gap. So if we blow this up, it could become shortable in here on the gap fill. Something to keep an eye on possibly. Here's Unity Software, another infinite PE name. But notice, all of these things are just down in bear flags, and they're not really pumping that much off the bottom. Yeah, sure, they can get 10, 20% moves off the absolute lows in a couple, 3 days, but they're very fast. And how do you catch them? Very difficult. DoorDash, 5.9, this one right up to these prior highs coming into the 200-day line. And if you look at this pattern, where are you? You're just down in a bear flag. So anything that's moving, that's where it's moving from. And so it's very difficult to say, oh yeah, this is a new bull market and everybody get long. And in this case, you can either sit it out or you can stock the short side, or you can figure out another way to play it. I'm only playing it in my trading account, my day trading / swing trading account. I'm doing nothing positionally other than playing gold here, which is coming up off the lows, but it's not clear to me. And there is some profit margin off the lows, off the UNR that we saw. And I think we talked about it last week. Off the lows from, I think it's the October 2020 low or 2021 low, something like that. We'll look at it in a second here. But I just want to go through some other names. Alteryx is an infinite PE stock, cloud name, rallying into the 200-day line. I mean, to me, that looks more like a short than a long. Just see how this plays out. But so far, it is, to some extent, rolling back the other way. If we just look at the 620 chart here, we can see very quickly that you ran up to above 62, but basically you're just running sideways. So nothing's really broken yet, which means it could, because you have this MACD cross here, and of course you'd want to see it bust the 20-period line to confirm, but that's a potential short up here. I don't see any reason to be long it unless you're squeezing shorts, but that's basically what it looks like. You're sitting just below the 200-day line. So if you want to take a stab here, that would become your covering guide. Given that it's already traded above that earlier today, I wouldn't be surprised if it pushed past that. So you might want to just keep things tight on the 620 chart. But you know, it looks like it's pretty flat, but you're getting a couple of points in there back and forth. So I don't see any questions yet. So if you have any, make sure you ask them. What else? Let's go through some other names on this list that are moving this morning. Shopify is another one, but where is that? This is way down here in a bear flag. It's actually pushing up to that black 65-day exponential. Silvergate Capital is another crypto name. They're a crypto banker, and that's in a double top position here, and it may be rolling back. Let's see, this high is 97.10. Right now we're trading at 96.76, so technically triggering a double top short sale entry using the 97.10 price level as a covering guide. Here's Twilio, nothing going on there, but that's a big mover today. Zscaler pushing into these prior highs on the bear flag and the 65-day exponential. So you get a pretty good sense of what I'm talking about. I don't see anything that strikes me as overwhelmingly compelling. And particularly thematically, I don't see anything. And so if I can't figure things out from a thematic standpoint, then I'm mostly not going to play unless I'm going to screw around with leverage ETFs, day trading them, and that's pretty much it. Let's look at Royal Caribbean. You know, there's always some life in these names whenever there's some news about how things are returning to normal in the travel space, but you're still just in a bear flag. Dynatrace, they reported earnings this morning. They're trying to rally. So you are en route to a pocket pivot coming up through the 50-day line. You kind of had to hit it right there because now you're coming up to the highs of this flag formation, and I'm not sure what I would call that. Doesn't really look all that appetizing from a longer term perspective. So again, you know, something moving sharply today, and there's really nothing in the pattern that tells you this is a leader. It's basically a dead stock, as Chris is saying, a dead bat bounce. And that's pretty much the story. Okay, so let's go through some more, see what else I see down here. Denbury. Now, the oils are interesting, but Denbury reporting earnings, I think, tomorrow. Resistance at the 200-day line. I noticed that's in some oil names. I've been looking for some of them potentially to come out of these pullbacks, but not really panning out. Here's Paycom. They reported earnings the other day. I think it was yesterday, and gapping up through the 200-day line. So is that going to be a long entry there using the 200-day line as a selling guide and treating this as a bottom fishing pocket pivot? Or does it reverse through the line and trigger as a short sale? So one to watch that way. Here's Block, formerly known as Square. Okay, they're rallying that, but you know, where are you again in the grand scheme of things? Is that a leader? I don't think so. PayPal is rallying today. We already talked about that. And let's see, Tesla. Now, when they talked, or when Manchin jumped over to favoring passing this big spending bill, $356 billion for alternative energy, and you saw the solars run, but that's really all you saw. That the electric vehicle names, for the most part, did not participate. Tesla has, though. But notice Tesla's sitting here at the 200-day line. Does that become a short here? That's something to think about. MicroStrategy, Michael Saylor is leaving the company, or he's stepping down as CEO. They probably told him he needs to step down, but he's going to remain as chairman. This is a guy I think who's led the company over a cliff, throwing everything they have into Bitcoin stupidly, in my view. I mean, it's very amateurish what he's done, but the stock is rallying on that news. So what do you have? You have a pocket pivot developing. You can see the neon green bar here, right? And that's telling me that we're on track for a pocket pivot volume signature. We'll see if we actually get there. MGM Resorts, travel name trying to move. Let's see, what else is in here? Microchip, they reported earnings yesterday. They're in a double top position as they approach the 200-day line, and it's in an extended position, extended rally off the lows. This one possibly could have been played as an undercut and rally way down here. But again, easier said than done. Somebody said MSTR may be over allocated to debt. Yeah, they've issued a lot of debt to buy Bitcoin so that they could post $1 billion loss in the most recent quarter, an impairment charge based on their brilliant Bitcoin purchases. Here's Sprout Social reported earnings yesterday, pushing into the 50-day line, possibly a short there. But let's go a little further. Let's see what happened. So that gives you an idea of what's moving today. And is it really something, names that look like big leaders? Ford looks more like a short up here than anything else, because if we look at this pattern there, that's the whole pattern. And that's what a bear market rally looks like. They're good enough to look convincing. And if you get long at the right spot, or you're able to buy a pullback somewhere on the way up. So for example, if you're looking at this one, you get this pullback to the 50-day, volume is light, you could try and buy that, okay? But you're basically hoping to get lucky. Because again, thematically, there's nothing that I find compelling in this market. So I don't have to play. And you don't have to play, just so you know. Sometimes not losing money is better than trying to make money when you really can't make money and it's not that easy. So, all right. So a couple other things I wanted to go through. Let's take a look at, let's just peel off the screens or the filters here, and we'll go straight here. But if you look at, say, let's look at my daily notes. I did go through this morning and throw some names up, but I don't really see much going on here. There's a PayPal, Arch Resources. Now, this is a coal leader, undercut and rally in progress here through the low. This is one of the few setups I can find today, believe it or not. That looks even halfway decent, but the low is 122.10. So today we went to a low of 123.61, I guess. So you're hanging above this low, and the undercut and rally took place over the past 2 days. So if you want to give this one a shot on the long side, you could, and then the 200-day becomes your selling guide. Now, a note about undercut and rally news, because I know it's like anything else. People learn about an undercut and rally. They see them everywhere, and anywhere and everywhere they see them, they want to buy them, or they think they're these great long entry positions, and you're going to make a ton of money if you buy them. Well, stocks in severe downtrends, the undercut and rally is just a cover point on the short side. Then you may get a tradable rally back to the upside, whereupon you short a stock again once it does that. So, for example, you can see that turned out to be the case for Arch here. You had this undercut and rally, and then it just became shortable into the 20-day line, and now you're hanging along the lows. But if the market continues to turn, I think your better undercut and rallies are going to be in stocks that are probably closer to their 52-week highs, and maybe in positions where they've run up for a while. Now they're chopping around, and maybe it's going to build a new base and turn out of it. Not like I'm going to hold my breath on this, but that's the way they'll tend to work better, or at least the way they have worked over the past 3, 4, 5 years when I started using undercut and rally setups as absolute long entries. So that was a function of the QE market. Anyways, the rally is based, well, probably today's rally is a big relief rally because they didn't shoot down Nancy Pelosi's plane yesterday. But did you really think they were? I mean, seriously? I didn't really see that happening. So I thought for sure they're going to, once she lands, yesterday when she landed, the market rallied intraday, but then it rolled over again because you had Fed heads coming out saying that they're not done raising interest rates and they don't believe that they've stopped inflation yet, which makes complete sense because they raised Fed funds to 2.5%, I believe, and inflation as measured in using today's methodology, which wildly understates inflation because it excludes food and energy. Inflation is 9.1%, but if you actually use the 1980s calculation that generated the numbers to which we compare today's numbers to, you come up with 17.3%. So 2.5% interest rates are going to kill 17.3% inflation. I don't think so. And so there's kind of an absurdity there. But again, you're in a position for a bear market rally, okay? Both from the extent of the downside in a percentage basis as well as the duration at this point, okay? If we're looking at prior markets. So, the big question then is, well, can you make big money? I've shown the example of Ariba back in 2000. And for those of you who've never seen it, let me see if I can find the chart again. Yeah, here we go. And this is Ariba back in 2000. And this is where you topped out. You had this. It was a beautiful long during the dot-com bubble, and it just went nuts on the upside. And then when it broke, it formed a pod. Notice also, though, you get this undercut and rally down here, and then it shot back to the highs. And I actually bought it somewhere in here, and I made $10 million really quickly, and I was all excited and starting to look at the catalog of tropical islands for sale, and it got up here and formed a handle. I thought this was going to be like Cisco in 1994. Cisco formed a 50% deep cup with handle, and it broke out. And of course, that was 94, 95 when we had the big tech move. Different context, I think. Of course, I didn't really understand any of that at the time, not as well as I do now. And so it blew apart, and it did so pretty quickly. And that $10 million gain got cut down in a hurry, but that was one to play, okay? But it's definitely not breakout material. It's definitely not O'Neill style. So while you have people citing, oh, you had a follow-through day, well, great. So if you're citing O'Neill style bull market indicators or whatever, show me the breakouts, and they're just not really there. So that's really the problem. Now let's go back. I did throw some names into a list. Where did I put it? .com leaders. These are some names. And what I want to do is I want to go back. Let me make this bigger so everyone can see it. But I want to go back to the bear market. It's summer of 2000. And some of these leaders, what they did. So if you look at something like, well, Adobe Systems wasn't really a huge winner, but it did correct. And then it chopped. See how it chopped its way to higher highs? And actually did pretty well until it rolled over much more severely when the market rolled over in the latter part of 2000. But that's an example of a stock that was in an uptrend. But how easy is that uptrend to play? Let's move to the next one. Amazon, of course. Everybody remembers Amazon. And it's probably one of my favorite features about HES Investor software is that I can go back very quickly. I don't have to type in stupid, dates and whatnot. But here you have a big move, and this actually Amazon topped out in early December of 99, and then it broke down, and then we had this follow-through day in June. But notice how it never really came out of it. So that's you had a bull market rally, but that one certainly didn't. Now here's Broadcom, known as Avago today. That was a big winner back then. We'll go back to 2000 again. And let's see. Oh, they're not going to let me. I don't think I can look at this one because they think it's Avago. And the stupid thing about Broadcom is they call themselves Broadcom, but they have AVGO. They really ought to have BRCM. Okay, forget that one then. Don't ask me how that one got in there. Qualcomm. That was a big winner, one of the biggest winners. Lee Freestone had a huge position in this, 500,000 shares, and he rode this puppy on the ascending base, which I guess was here. But, to me, that's neither here nor there. I don't think the ascending base is that valid as an absolute pattern at all points in time. I think it was endemic to the dot-com bubble, but you can see it had a huge move. And then broke down. It topped actually at the end of December in a climax run. So it actually topped before the market did, okay? And then it broke lower. Now you had the follow through in June here and nothing doing. So that started the bear market rally during the summer, but you had a shallow move in Qualcomm finally towards the end of summer, and then it topped out and broke to lower lows. So you get a sense of the problem that you're facing if you want to try and play the long side here. A lot of these stocks have had some pretty sharp moves off the absolute lows on a percentage basis. But, you know, in the grand scheme of things, they're just trades. So if you can catch them, then yeah, more power to you. But are you really in a market where you can position build and play for an intermediate trend? Because as I've said before, it's a lot easier to make big money that way. It's like, yeah, I've had triple digit years in my day trading account, you know, when I'm just going nuts, but things really have to line up pretty well for you. It's a lot more difficult and it's a lot more work than just taking a positional approach, which, you know, as far as my positional accounts go, I'm just sitting here. I'm not doing anything other than playing gold. So if we look at the GLD, for example, let's actually just go to my my miners group, and you know you're seeing gold rally, but the miners rally and they just become shorts. So for example, you see Agnico yesterday doing that. Alamos Gold, you know, that's a cheapie rallying above the 200-day line and then it rolls over. Anglo Gold is another, well, it's not a cheapie, but you know, it runs up into the 20-day line and then it rolls over. So the miners have all been shorts. And even yesterday, my favorite miner is actually Goldfields, just because I think they're sitting on the most metal, given their market cap. And so the other one I like here is First Majestic. But notice how all it does here is run into the 50-day line and then it rolls over. So that becomes a short there. Fortuna, that's just rolling over. See, you see how all these are rolling over. Goldfields was a short at the 50-day line. So even though I may trade these long, I will trade them short as well. And essentially, you're just coming up to the highs of a bear flag. And so you're not really getting any movement out of the miners. My thinking is if the Fed is really going to pivot, okay, and you kind of know when something is played out because now they have a term for the Fed suddenly shifting gears and starting to ease now that they've killed 17.3% inflation with 2.5% worth of interest rate increases. The Fed is now going to return to their money printing ways. I would expect that gold and silver would perform well, and they're trying to come up off the lows. You see the GLD here. If we look at this, this is really a long-term UNR through a couple of lows down here and here and here. Let's see if I can pick this up on my crosshair. Yeah, you can see that in here. That's from 21, but notice also if I go further out, you're also testing these lows in here. You didn't quite undercut them, but you are running up through this one here. So you do have an undercut and rally in play right now, but here we are coming in to test the 20-day line, so we'll see how this plays out. Now I'm long at gold right now and silver, and they're moving up, but you know, I'm skeptical that it's going to work, which maybe that means it's going to work. I don't know. You look at the Sprott Physical Silver Trust, you push into the 50-day line, you're rolling back, much like some of the miners. If we switch to the SLB, which sometimes you'll pick up signals there because you did have a bottom fishing pocket pivot last Wednesday, I think that is, yeah, and pretty nice volume. But now you're leveling off and you're coming into the 20-day line, so we want to watch this. And maybe it's just that the metals will do better than the miners and hold up better. And we'll just see how this plays out. But it's very much touch and go with that. So from a positional standpoint, I don't see a lot to do here. But there's a lot of stuff that you can mess with if you want to mess with it. So, you know, I've been playing. I like CCG. I like that off the after earnings. It came in with 18 cents a share. You had a nice buyable gap up here through the 200-day line. You can buy it, but it runs up, you know, 10%. Take the profit and run. Now you're pulling back in. Do I want to buy that? Possibly, but I don't know. It's neither here nor there. If we look at things on the weekly chart again, it's sitting up better in its overall pattern. You could say that it's basically in a big sloppy consolidation, not in a downtrend. So you're trying to hang up in this big ugly thing, and maybe the lows become places to buy it. But in here, I'd want to see how this sets up, and I can come up with a thematic basis for buying this stock, which is uranium. I still think energy is going to be big, and so, you know, oils also come into play potentially. But I'm looking at a lot of these names. So this is my oils watch list that I monitor every day. And you know, look at Chesapeake Energy. That's a pretty ugly outside reversal today. Well, not quite an outside reversal, but getting there. Chevron, I thought this might be a buy coming into the 50-day line. It doesn't seem like it wants to hold, and I'm seeing volume pick up. So not necessarily looking bullish here. So what's up with that? They're piling into techs, and you see Diamondback came out with earnings, I believe, yesterday or the day before, pushing into the 50-day line in reverse. So that theory of mine that maybe oils will come up off the lows of bases isn't really panning out. What's really pushing the market is semiconductors. And primarily, you've had stuff like AMD coming off the lows. But today, you've got analog pushing higher, applied materials pushing higher. And this group has probably been one of the areas leading the rally. But again, if you look at these, so these all look pretty bullish here, right? They're coming up off the lows. They look great. You just can't wait to buy them, right? But if you do this, just keep going. That's the whole. That's my big stock semis. But if we move out, this is where they are. Maybe Texas Instruments pushing up towards prior highs. Looks like it might become more shortable than buyable at some point here. Taiwan semiconductor, it's not really doing anything. Coming up off the lows. Texas, and I already showed that. Where am I? Okay, here we go. Going backward. There we go. Yeah, what's that doing? Not much. What's that doing? Not much. Qualcomm, it was a short at the 200-day line. What's it doing now? Well, you got a low volume move back up into the 10-day line. Not much there. NXP pushing up for the 200-day line and the prior highs. Not much there. NVIDIA, same thing. Microchip, I pointed this one out before, pushing into the 200-day line after earnings. Maybe it becomes shortable there. The other thing that's been keeping the ships buoyant is the fact that Congress is going to spend $52 billion on aid for semiconductors, which, I really don't think they should have to do that. And what exactly are they going to give the money for to build plants? Intel said unless they get that money, they're not going to build a new plant, which tells you that standing alone on its own, building a new plant necessarily isn't the greatest business decision to make right now. But if you give me free money, I'll build it. Sure. But there is more of a chip glut right now than a shortage. But, the government is always going to be a day late and $1 short. So anyways, we're pushing up. Dow's up 308, Nasdaq up 255. It's pretty wild, and they're just hammering it higher. So, semiconductors are helping to push it higher. And also, you'll see the big stock Nasdaq names pushing the indexes higher off the lows. Google reported earnings, had a gap up move here. That was last Wednesday. Now you're pushing to the highs of a bear flag. Is that going to break out and push higher? Who knows? Amazon pushing for the 200-day line. Am I going to buy that? Nope. I suppose you could have bought the move after earnings as a potential bottom fishing viable gap up. Apple is pushing higher, and money just piles into that whenever it wants to get into the market. So seems to work out. Booking is going to report earnings after the close today, so they're trending higher. Cisco, not really much there. Intel got beaten up after earnings. Meta Platforms, nothing really there. Microsoft is helping to push the market higher. It's in a double top position here. See if it can sustain. Netflix, I'm not really seeing anything there. If it got up to this high here, which would be the bottom of this gap down window, 248.70, that might be a spot to look at a possible short entry, but right now there's really nothing going on. I already talked about NVIDIA, Oracle, nothing really there. Qualcomm, again, we talked about that one. Tesla looks like it might become a short along the 200-day line. And that's what you got going on. So you probably have some ebullience that they didn't shoot down Pelosi's plane, and there's this continuing idea that the Fed is going to be lowering rates soon, or they're done, or they're ready to pivot. But yet there is no evidence regarding that, either from the Fed's planned actions, from where inflation is at, real inflation, and just any logic about how pushing interest rates to 2.5% is going to quell inflation that is 9.1% when understated as it is by the government's current way of measuring it, and 17.3% if we use the method to measure it that was used in the 1980s, and also that's what we compare everything to. So, when you had 9% in the 80s, that was a lot less than 9% today. which is really 17.3% today. And that's what you're looking at. So somebody asked, what are the types of names you're looking for to suggest that the bear market rally is nearing its end? I just said that. I would want to see some better thematics. You know, I want to see some better patterns. You got everything coming up off the bottom. So, you know, pay attention to what I'm saying, because I'm showing you what I don't see and what I would need to see. You know, so just use a little logic here, common sense, and you know, I want to see some better bases. I want to see stocks that aren't just coming up off their lows and retracing some small amount of their prior declines. You know, I need to see something better bases in terms of tighter price action, and that would be within uptrends, not downtrends. I mean, it's pretty obvious what you're looking for, and it's just not there. Anyways, any last questions? That's all I've got. I'm going to wrap it up. I've already been going for 35 minutes, and that's not without Chris's 10-minute Bitcoin commercial or whatever he talks about at the beginning. In any case, any other questions? Because that's all I've got. And got some things you can look at as potential ideas. I'm not really confident about, you know, I'm not really pounding the table on anything here. It's summertime. We have a decent swell here at the beach. I don't know. Maybe I just go surfing. Anyways, any other questions before I wrap it up? I'll give you 10 seconds. What else going on here? Look at AMD still going lower, so that's working out as a short. Oh, First Solar too. That was another one. The solars, I probably should check these out real quick. Let you guys think about some questions real quick. But solars have been running up, and they've been running on the news, you know, that they're going to throw $356 billion at this climate change industrial complex, as I call it. And Enphase coming in, SolarEdge getting plowed. But, you know, a lot of these to me are in positions where they could become shorts. And SolarEdge reported earnings yesterday, and that's just blowing apart. That actually triggered a short sell entry right at the open. If you're using this high as a double top entry, you could have used that as a covering guide. It's a little bit steep there, so I probably would have used this peak here to keep it a little tighter, and that's working pretty well, which may also indicate that some of these other solars are going to roll over as well. Sunrun, I believe, reports after the close. Let me double check that. Today is Wednesday, correct? Yeah, Sunrun is going to report after the close. And who else? Well, you got Fortinet also going to report. Booking.com, among the big names. Fertilizers are trying to move. Some strange action there. I don't know about Agco. That's a little bit of a slingshot type setup where you run up and then you pull back, volume's drying up. Maybe it's going to turn out of there. But you have CF Industries kind of in a double top position. So yesterday they reported earnings Monday after the close, I think, or Tuesday morning. In any case, stocks looked like they were going to sell off. Yeah, it was Monday after the close, and they were actually gapping down in after hours action. And then today pushing higher, and you're seeing them reverse. So it's possible these may head south from here. Mosaic is another one. You see that's kind of reversing. It's hanging along the 65-day and the 50-day. So anyways, so that's another possible shorts there. So again, there isn't really very much here. So and again, if you understand what to look for in a real bull market, you know, I shouldn't have to explain it to you. I can show you by example, and I've just shown you what I'm seeing, which is not what I want to see. There are no powerful thematics. There are no real leaders forming bases within uptrends. And there's, in most cases, you have infinite PE stocks just rallying higher, and that's pretty much it. Anyways, I already looked at Google, but I'll look at it one more time. I mean, what about it? I mean, you can see it's heading up to the highs of the bear flag, as I pointed out, which could bring it into a short sale position. So it's a bear flag. So what do you mean is the base meaningful? I don't know what that means. Is it meaningful? Are you a meaningful base? Maybe you should ask it. You know, I think you need to just expunge from your mind this idea that you're going to label things as meaningful. You know, what the hell does that mean? Explain yourself. You don't know, see? So it's a bear flag. You're rallying to the highs of the bear flag. You can see it. You don't have to impart, you know, superlatives or other descriptive terms like it's meaningful. It's confirming. That's all BS. Just take things at face value. What I see right now is a double top. Maybe that's how it plays out. Maybe that's how it doesn't. I don't know. But anyways, that's what we're seeing today. I've already gone 40 minutes all by myself. What do you know? Anyways, that's it for now, you guys. Thanks for showing up. We will talk to you next week. Take care.